Just in time for the big travel weekend, today marks the first time in 16 days that gasoline prices didn't set a new high. The national average holding steady at $4.60 a gallon, and that's still $1.50 higher than a year ago. Meanwhile, oil also sitting near record highs after crude jumped to nearly $115 a barrel, the highest level since May 18th. So what can be done to bring down prices? Yesterday on Power Lunch, Bank of America's Francisco Blanch suggested people might want to consider driving a little slower. Politicians might consider lowering speed limits even. Joining me now with his take is Andy Lipow, and Lipow Oil Associates president. Andy, welcome. I mean, how likely do you think a move like that would be, and how much would it save in terms of demand?
Well, I think it's very little. We saw back decades ago going to a 55-mile-an-hour speed limit. It probably saves about 2 to 3% on mileage. But these days, with more efficient cars, that benefit is going to be far less than we had seen in the past days of gas guzzlers.
Are we talking maybe a 1% demand savings, something in that range?
Yeah, maybe something like that, which is only equivalent to 90 to 100,000 barrels a day, which is very small in the scheme of the consumer using 9 million barrels a day. 9
million barrels a day. And I've seen reports that we're starting to see a slowdown in gasoline demand in reaction to prices. What are you picking up in the data?
Well, we certainly see it on the fringes where the consumer is combining their trips to the grocery stores or other errands in the local market. But I think the big key for demand destruction is what happens this summer as Americans take to the road for their vacation.
Is there any sign, we've talked to other analysts about this, but gasoline prices are a little higher than normal compared to the oil price, and I understand that's because of some refinery shortages and that kind of thing. Is there any relief in sight where at least maybe gasoline prices could fall a teensy bit relative to what the price of oil is today?
Well, I think today's decline is going to be short-lived because we've seen both crude oil and gasoline prices rally over the last week. I'm expecting that over the Memorial Day weekend, gasoline prices are going to rise 5 cents a gallon. But as far as getting more refinery capacity online quickly, that's simply just really not the case here in the U.S. We will be utilizing more capacity as we end the spring seasonal maintenance period over the next week, but it's not likely that we're going to be restarting the refineries that have been shut over the last couple of years.
One of the kind of scary features of what's going on right now is that because demand is outstripping supply and because we're releasing barrels, we are drawing down inventories right now. Are they worrying you at these levels?
Yeah, it's a very big concern because gasoline inventories for this time of year are at the lowest level since 2014, and the Strategic Petroleum Reserve inventory is at its lowest level since September of 1987. These are only buying us some time, but the real key is how do you get more energy to the consumer and more oil out of the ground to make up the deficit that we're seeing from the sanctions that have been imposed on Russia.
And do you have any answers to how we would do that?
Well, there's some answers, but they're all long term. I mean, you need to have a combination of drilling for more oil where the environmentalists don't want to hear that, or creating more renewable fuels, which is still some years away, but gets you into a debate of food versus fuel. Or you can have price be the ultimate arbiter and rationing of supplies. As the price goes up, you ultimately get enough demand destruction to get us in balance. But the ultimate solutions are several years away, and you can even see that in the actions that are being taken over in Europe as far as natural gas. Building LNG facilities or infrastructure, that's a 3 or 4 year process.
So do you expect the price to peak this summer and then fall back towards something more normal over the next year or two, or what's your feel for it these days?
Well, I mean, that's an excellent question because it really depends on how these sanctions with Russia play out. And if additional quantities of Russian oil are taken off the market and we don't get additional supplies, especially by asking OPEC to open the taps and make up for their shortfall from their production quotas, or if we don't get additional supplies out of Iran and Venezuela by easing sanctions, which is also unlikely, I'm afraid that really what we're going to see for the rest of the year is higher energy prices through the summer and going into the winter.